Hello and welcome to the Alt Asset Allocation Podcast. Today's interview is with Adam Blumberg. In this episode, we discuss all things decentralized finance or DeFi. We've discussed DeFi a few times already, but Adam is taking a slightly different approach. He's building PlannerDAO. So I'm just going to read the tagline: empowering financial professionals to make digital assets and decentralized finance, or DeFi, accessible to all investors. He's getting financial advisors and these fiduciaries over the line with DeFi and why it's important, and using that to help educate the masses on why it might make sense to allocate a little bit of their capital to DeFi, or at least not ignore it. This is a really good episode on what DeFi is, where it's been, the timeline, why it's important, talked about regulation, and of course, where it might be going. Before you listen, please don't forget to like or subscribe to the podcast, or even better, leave a review. If you're watching this on YouTube, hello. Please subscribe to the channel or give the video a thumbs up. This really helps more people find the podcast and keep this thing going. 2022, I'm going to ramp back up the podcast. Don't worry, it's back. I've been really busy building charged particles amongst other things. So excited to get this thing going in 2022. All right, Adam Blumberg on DeFi. Enjoy. Adam, welcome to the Alt Asset Allocation Podcast. Excited to have you on.
Great to be on. We've been talking about this for a while, and it's good to be on here, see you chat about some DeFi stuff.
This is a long time coming indeed. And actually, you're one of those, internet people, internet friends that I was fortunate enough to meet last year in real life, and it's like, this is the funny thing that will become more and more common, that somebody for over a year or years, and then finally meet them kind of in real life. And you're like, yeah, I knew I'd like you, from our Discord messages.
If you remember the funny part, when we met at MCon, I texted you and I said, are you even here? And you said, I'm right next to you. And you were like 3 seats over.
Oh yeah. Also the joy of people using, pixelated images of their profile pics, kind of forget what their actual face looks like as well. So yeah. Awesome. Well, yeah, I'm excited to have you on today and talk a lot about what you're spending a lot of your time on, which is DeFi. But before we get into all of that, let's start off a little overview of you, background, how you got in crypto, and there.
Sure. Always the origin story is fun to start with, right? Find out where we're coming from. So I, in addition to, a few other, I guess, careers I had, one in technology. I actually started my career, my working life out of college at Intel. So heavy into technology. This is way back in the late 90s, and then came all the way back to, I had an IT company that I sold, and then I got into financial services in 2009. I have a business partner named Ron, and we started our own registered investment advisor here in Texas. We met in 2012. We started that, I think, in 2014 or 2015. 2017, I got into crypto, and I always say, like, the story of how I got in is sad, funny, all of those things, because I living in Houston, Texas, we unfortunately had Hurricane Harvey. If anyone remembers it, this biblical flood. My house was one of them that flooded. And we had about 24 inches of water in the house, ended up selling the house, taking the insurance money, taking whatever I could get for the house, which was obviously well below what I paid for it. And we were renting for a while. So I had all this cash piled up, not quite knowing what to do. And at the same time, my partner, Ron, starts telling me about Bitcoin and crypto. And I, being the typical financial advisor, oh, that's all crap. It's, I don't believe in any of that. And when I say it's all crap, the only thing I knew of was Bitcoin. Right. So finally, he convinced me, just go buy some on Coinbase. So I went to Coinbase and I said, do you know there are 3 of these things? Which one do I buy? And so in my naivete, I bought ETH only because I saw Bitcoin had moved up to $5,000 and ETH was at like $199. And I was like, oh, well, surely the other one's going to $5,000. I mean, that's obvious, and I can buy more of it. So why wouldn't I do that? So I did. And then I got introduced immediately to a market that is 24/7, which means every 8 minutes I would check Coinbase to see what it was worth. I'd wake up in the middle of the night and check all of those things. Didn't tell my wife I was doing this, by the way. Didn't tell her this is what I was spending our insurance money on. And eventually Ron said, did you know there are actually thousands of these things? We can go trade them. And I was like, oh, well, obviously we should do that then. Of course. I have no idea what they are, but let's go do that. So we went on to Binance and Bittrex and started trading against Bitcoin. And yeah, good 24/7, 365. I'm looking at charts. I'm signed up to all those crappy pump and dump Telegram groups that I didn't realize were pump and dump Telegram groups, and trying to trade and make more Bitcoin. And at one point, my wife, we were getting ready for bed, and she said, I have to ask you something. Are you having an affair? I said, I don't know. What do you mean? She said, well, you just stare at your phone all the time. You don't even talk sometimes. You're in the middle of the night, you're on your iPad doing stuff. She said the other day you went upstairs to change clothes and you were gone for 45 minutes and you came down looking at your phone. So are you chatting with having an affair? And, I kind of laughed about it. And then there's this really quick thought of like, maybe I tell her I'm having an affair because there's therapy for that. And there is no therapy I took our insurance money from our flooded house and dropped it into fake internet money. And now I'm trading it 24/7. But all that being said, I told her, and she asked me a little bit more. And that's what kind of sent me down the rabbit hole to say, I have to go learn why there's thousands of these things. Why should there be all of these different cryptocurrencies? It doesn't make sense. They have odd names, and I don't really see anyone talking about them except in these pump and dump groups. So let me go figure it out. And that sent me down the rabbit hole of learning blockchain technology at the time, which I was really excited about. It just made so much sense, especially being in the financial world, seeing all the inefficiencies in the financial world. It just made so much sense to me. And this is like early 2018. So there was no DeFi at the time. My thought was we're going to use blockchain technology for shipping and for construction companies and for obviously, home title is the most obvious one, and insurance. I had all these great ideas for it, which no one cared about. And then fast forward to 2019, when, we would talk to people about crypto, but still had our financial service practice. And Ron said, why don't we start a YouTube channel where you just get on the whiteboard and explain stuff? And I said, I don't even know you could do that. Like, what is it? I assume you have to ask YouTube if you can have a channel. And he was like, no, you just actually create a YouTube channel. So figured out how to do that, started explaining how blockchain and crypto works. And just from the perspective of the financial advisor, not trying to get anyone to buy it. And then, eventually what it became was we shut down our RIA to try to teach other financial advisors about crypto and DeFi and how it works, because we feel like once more financial advisors learn, then more people are going to be comfortable making crypto part of their portfolio. And eventually, as I'm sure we'll talk about in here, Ben, eventually it's not just making it part of their portfolio, it's making it part of their financial life. It's making DeFi part of their financial life in terms of, this is how I hold money, this is how I bank, this is how I earn income. And so that is what we really want advisors to understand. And advisors honestly control hundreds of trillions of dollars of wealth worldwide. And we want to help them understand crypto and DeFi so that they can start helping their clients. So that's kind of where we are in the course of all that. Created a course, a certification, and a DAO for financial advisors called PlannerDAO.
So yeah, and that's precisely why I wanted to have you on. I mean, a very, very intelligent approach. Hard, not the most easy, but going after RIAs as the trusted authority to what you should do with your money, and kind of getting them over the line. Hey, DeFi isn't just this thing, this flash in the pan. It's here to stay. This is what it is. This is pulling back the curtain a bit. So really, really awesome. And just wanted to comment that, like, it's amazing how many people believe that, air quote, being in crypto means trading, and they don't really get past to that. So kudos to you for actually like full falling down the rabbit hole and experimenting with all of these things, because a lot of people don't quite get past that initial hump. They get burned or whatever. And then it's off to the next shiny object, I guess.
Right. And that's actually something interesting to talk about, Ben, that I've talked about, with a few other people, is that for the last few years, trading and profits and the investment and the value or the relative valuation has consumed the entire narrative, right, of crypto and DeFi, and that even goes into NFTs, right? It's been all about the narrative around the value of NFTs. And those of us kind of on the inside know that it's so much less about the value of them. It's so much more about the infrastructure that's being built, about the fact that we're really seeing what ownership looks like, or what custody or control looks like, and we're trying to build that. And this NFT boom is really giving us the funding. I say us like I'm building anything. You're the one building stuff, right? Is giving you all the ability to grow that infrastructure, and that's really the important part. So again, the value in the investment has really taken over the narrative, but what's being built underneath is really the important part. And it's so analogous to the internet, the beginning of the internet, where it was so much about the value, the companies that went public and what they were worth, and people trading the stocks. And ironically, because of the internet, there was E-Trade, which allowed you to go trade the stocks that were about the internet. And then, once the values fell, once we had the dot-com bust, and everyone said, "Oh, well, that's over," you realize, no, the infrastructure was being built. And then we got the internet. Like, we really got the internet, closer to what we see today. So whether the valuation and the investment is very much the narrative that's happened so far, but it's really the infrastructure that's being built that's fun and exciting and important. And that's what we want to talk about.
100%. And number go up is a very addictive game, but these bubbles are good in that allow a massive influx of capital that really allows people to be innovative and truly build these things that can be core infrastructural pieces that are so crucial going forward to allow for that next, like, more sustainable boom. That's for sure. So with DeFi, I mean, let's just start. I've done a few podcasts, probably right in the heart of DeFi summer last year, but how do you explain it to newbies? Like, what's kind of your definition of DeFi and why it's important?
I think, well, kind of the definition of DeFi, or how I explain DeFi, is all the things, the ability. It starts with kind of peer-to-peer transactions, right? If I'm going to let you borrow money, right? I'm going to lend Ben some money, and right now we can do that. You and I know each other. I trust you. You say, look, I have this great business idea. I look at the business plan. All right, Ben, here's $100,000. Go do with it what you want. Now that $100,000 was maybe sitting in my bank account, not doing a whole lot, earning virtually nothing. I get it to you. You can do something with it. It's good for the economy. It's good for you. It's good for me. That's a much better system. Now, our relationship doesn't scale, right? I can't go find a million Bens. You can't go find a million people that happen to have money to let you borrow it. That's where banks came in for years. Banks were that go-between. I put my money in the bank, it stays safe. You go to the bank and you say, I have an idea, I want to borrow some money, and they decide if they're going to lend you the money. I have no purview or no interest in that relationship. And for that privilege, or for the bank doing that, they take a fee, right? And that fee is they charge you 8% to borrow the money, and they give me 0.01, and they keep the difference in a nutshell. So imagine now we don't need the bank, and I can go to you, but I don't have to know you or trust you. But we use computer code to make sure that you're going to pay me back and that my money is safe and I earn that interest. So that 7.99% the bank was earning now goes to me, or goes to me plus this little bit of code that's helping to run it. That's essentially DeFi, right? The whole financial system, our entire economic system, is all about getting money from where it's least efficient towards most efficient. Right. My investing is taking money that is not efficient for me and getting it into a more efficient process, or a more efficient system. And so there's so much of that trust and so much of that we can outsource to code. And that's what decentralized finance is about. It's how can we make those relationships scale in a way where we don't have to have an intermediary that has buildings and people and advertisements on TV and all those things, because that's what's costing money. We've needed that for a while. Now we can take code and replicate a lot of their processes. So why shouldn't we do that? Why shouldn't we evolve that way? And so it ends up being just a combination of technological and economic evolution. It's exactly where we should be at this point. We have the technology, the economy has evolved. Why shouldn't we put the two together? So I don't know if that's a very succinct definition of DeFi.
Oh, it's a really good one, though. I appreciate that,
but
actually.
It helps. Yeah. I mean, for me, it helps, break it down and make sense a little bit that it's just taking this peer-to-peer relationship we have and scaling it using code. The same way we scaled chat, the ability to chat with each other, or talk to each other using the internet. Right. It's not a whole lot different than that. I have, thousands and thousands of online friends. I don't know any of them for the most part until I meet them because they're sitting 3 chairs down from me at a conference.
It's true. It's true. Which was a damn fantastic conference too, by the way. So the IMCON guys, do it again. Actually, it's in September of 2021. So
and I will be there again.
Yeah, likewise. Okay, so it's great intro, what DeFi is, kind of why it could be important. Let's go through like timeline, what has been like these core pieces that have existed so far. What have we done? Where potentially are we going? Trends that are emerging, things that you find interesting, kind of overall state of the market, DeFi market.
So it's interesting, and I appreciate it because the way I think to step through it, and this might take a while, and you can stop me in the middle if you want, we can hash out. But first you had Bitcoin, and the idea of Bitcoin was, again, like don't let banks necessarily always be the intermediary because they cause all this friction and they add all these fees. And look, in all honesty, we have the technology to not have to do that anymore. But the technology meant that we had to get people to connect their computers and process transactions. And in order to do that, we had to create an incentive. And the incentive could not be dollars. It had to be something that we created that didn't go through the banking system. And that's why Bitcoin, the cryptocurrency, was created to incentivize people to process Bitcoin, the network. That's it. And Bitcoin, the network, was successful enough that some people decided we can do that not just with transactions of value moving back and forth, but with code. So now we can create essentially a mega computer, and we can pay people to process the mega computer, to be the mega computer. And that currency that we had to create was called Ethereum, or ETH, I guess, ETH or Ether on the Ethereum mega computer. So I connect my computer, I help run it, I get paid to do that, right? And if I turn mine off, you're still running yours, and millions of other people are still running theirs. So the computer is just going to keep going, and we're all getting paid. And again, the currency was created to give the incentive, because without that currency that was created, then the technology ceases to be efficient. If we have to use dollars, then the technology ceases to be efficient. So we had to go down that road. Bitcoin had to be successful. It was. Ethereum had to come out. ETH had to be used. People had to start building on it. And the beauty of Ethereum, of course, was it was so open source. It was so open. There was no like, this is exactly what you're going to do with it. They just set it out there and said, do with it what you will. Let's be very organic and figure out where this goes. Right. And in all honesty, look, CryptoPunks came before DeFi. So we had NFTs before we had decentralized finance applications. But then the first thing we saw that we had to have was a stable coin. Right. Like if you're really going to run this, you can't have programmable money that moves up and down in value 10% within a few hours. Right. You and I can't have a contract that goes longer than 12 minutes. If we're going to use something that is volatile as our programmable money. So we had to have something that was stable, that was worth roughly $1, because that's what we all use. And so Maker came out with DAI, and DAI was successful. But all these, like, we had to test and make sure that the pillars were successful, right? And DAI was pretty successful for a while. It held its dollar for a long time, for the most part, and did so in a way where it didn't have to ask permission from any banks. This wasn't like USDC. So you had DAI. That is a stable coin worth roughly $1 at all times, but done through incentive mechanisms. And then from DAI, we had to move on to lending protocols. That was kind of the next one. So you have Compound and you have Aave, and you did have some peer-to-peer lending protocols. Honestly, Dharma, who just got acquired, they started out as a peer-to-peer lending protocol first, which I thought was going to be the coolest thing ever, that I could lend people money using this protocol, and it never really took off. Right. But then you had Compound and Aave that have taken off, and you realize, oh, my gosh, so we can, like, the bank is actually not a company anymore. It's just code. and it's working. Like it just keeps working and working and working. And even when it doesn't work, if any of them get hacked or whatever, like now there's insurance. Okay, so Nexus Mutual creates insurance and says, we're going to take out all the pieces. We're going to disintermediate by going, what are all the little pieces of insurance? What are all the little pieces of banking? What are all the little pieces of investing that are centralized with some entity? And can we figure out a way to get people, to give people the incentive to do those things on their own without having to have the insurance company go raise $1 billion to offer a particular insurance product? Can we go put that $1 billion inside this box, and if anyone needs it, then we have it we have it for claims? What's the incentive? Well, we need to give them some incentive where they're going to earn something, and we need to keep it safe. Okay, so that's what it is. It's just a series of incentives and liquidity. So DeFi has just been a series of incentives, liquidity. What are we doing with it? Let's create more incentives and more liquidity. Some of them have gone down some relatively bad roads, right? The intense kind of liquidity mining and yield farming, I think, was not always good for the DeFi ecosystem, because it put the focus so much back on how much yield I'm earning and not, am I building a system? Am I building an ecosystem? Am I building something that people are actually going to use in the future, not just try to earn 1,000% APR? And so where we are now is, look, we have stable coins, we have lending, really good lending protocols, we have really good insurance, we have really good exchanges, decentralized exchanges, the ability for you and I, for us to exchange tokens without having to know each other and without having a centralized entity. These are all important parts of the economy, of the global economy, that are being rebuilt using decentralized infrastructure. And it's happening so fast. It's happening insanely fast. Now we're building governance structures in DAOs, and now we're, and then NFTs is all about control and ownership rights, more so than it is about art. So like all these systems are, I say, slowly being built, but they're being built and they can be tested so quickly because it's all code and because it's all decentralized and because we know that if there's a hack or an exploit, it's going to happen really fast. We can go patch the holes really quickly. Yes, some people are going to get hurt in the process, but we're iterating through really quickly and can patch the holes fast, right? So we get to look at all this history of the global economy and how it built up relatively slowly because we didn't have the technology to connect as quickly. And now that we do, we can go, all right, we see what's been done, we see what we need to build, and now we can build it in hyperspeed because everyone's already connected. And because for the most part, on a lot of the DeFi, we don't have to ask permission. There's no KYC AML on most of it, right? You just connect your wallet and go, and let's throw out some incentive mechanism and a liquidity pool and see what happens. And look, and the code is all auditable. Everyone can audit the code. But the beauty of it is, the reason why we can iterate so fast is because no one has to go create the database. No one has to go buy database space and build a database and build a network. The network's already there running. It's incredibly inexpensive, honestly, to go build a protocol, to go create something on this, because if you do your incentives right, you have access to liquidity. The network is already there, running, being paid for by everyone else who's running it. So it makes for that incredibly fast iteration through the economic system. Now we just have to get to a point where people are educated enough to use it.
Right. No, and you bring up a really good point. I mean, you talked multiple times about the speed and velocity of change and innovation in the space. So I think that's very important because it's 24/7, like you said, it's global. So, we go to sleep and then the other side of the world wakes up and starts working on these things, and you can kind of iterate so much more quickly. And then, like you said, you have the ability to align incentives and incentivize this. So there's a monetary gain potential as well. But this really lends itself, and I think back to you going up to change your shirt and coming back 45 minutes later glued to your phone. I mean, there's a lot of FOMO in the space, right? Because you are focused on one little piece and everything else doesn't stop. It's actually accelerating exponentially as well. So I'd be curious how you separate signal from noise and kind of deal with the hyper speed at which the whole space is moving at any point in time?
Well, I wish I had a really good answer, and I wish I had done it well to this point, because I would be incredibly wealthy had I actually done that and focused on something this whole time. But what I have focused on, and what I've learned through learning enough that I could teach other people, is that there's so much going on, and if I'm going to FOMO into everything, I'm going to lose at every one of them, because I don't know enough about any one of them. I can say that the people that seem to have made it, to have done really well thus far in the DeFi space, and when I say well, I probably mean financially well, right? That's how kind of we judge it, are the ones who have found something that they're really passionate about and focused on it, and built it or invested in it. And we can find all sorts of those examples. And just like in any other industry, they seem like they're overnight millionaires, when in reality, they probably had to go through some period where it was working 20 hours a day, where it was not seeing the family, where it was foregoing some of their lifestyle, where it looked like it was really dark, and they were, maybe door dashing at the same time they were coding or something. And then whatever they were doing, they finished it, it hit, they launched, whatever it is, and all of a sudden now they're successful. And there's so many of those stories. And once those people get successful, then they get to invest in other stuff, and it looks like, oh my gosh, they're all over the place. But in reality, most of them focused on one thing that they were really passionate about. And maybe they looked at what else was going on, but they didn't say, oh, I'm going to put some of my time and effort there, and my money over here, because then it just draws your attention away from what you're really interested and passionate about, and what's going to make you successful, what you're trying to build. I mean, you all at Charge Particles, of course, built what you built because you had to be focused on it. You said, this is a good idea, we're going to build it, we're going to focus on it, and you continue to build and iterate. And then you have others that are building applications using it, and you go, I'm sure you go, wow, we didn't even think of that. That's really cool. Let's go, let's help those people, right? I know people that were very much into, metaverse and NFT like 2 years ago, before it was anything. And now all of a sudden they look like geniuses. But look back at them 2 years ago, and they were just trying to get anyone to talk to them about it, and everyone thought they were crazy. And now, here they are looking like the smartest people in the room, which they're incredibly smart people. They just had a passion behind something that wasn't ready yet. We weren't ready to accept it yet, right? We weren't quite there. So, kind of an answer, roundabout answer to your question is, look across all of it, but then if you want to get in, like, find something that you're really excited and passionate about, in either a project of your own or a project of someone else's, and, jump in. And yes, there's a bunch of other stuff going on, but try to have some sort of blinders on and go, what do I have to do today to keep my project moving forward? And if I have time left, I'll look at other stuff.
Yeah, absolutely. And work hard for 10 years to become an overnight success. And I'll just put out a PSA to listeners here that if you're unsure, like, what your passion is in the space, like, stay curious, jump into a lot of these discords, ask questions, contribute. Everybody's looking for human capital and people that are passionate. So maybe you don't know what it is yet, but crypto is this all-encompassing umbrella at this point that you could probably find your niche in whatever it is you're passionate about. There's a community of builders and people out there also very passionate about it, building something magical at this point.
And along those lines, Ben, people, you don't have to be a programmer, you don't have to be an economist, you don't have to any of those things. You just have to be, passionate, wanting to learn, interested, open mind, all of that. And there are so many opportunities within crypto and DeFi right now that have nothing to do with coding and nothing to do with economics. These are project. These are kind of like companies, and they need people who are good at certain things. They need people who are good at customer service, or are good at managing other people, or treasury management, or something like that are just going to work hard and learn about it. That's what these need. And so there's so much opportunity for anyone who wants to get in. And you don't even have to know that much crypto. You can learn it.
Oh, absolutely. You just need the aptitude to learn, right? And, like, everything is learnable. And if you're passionate about it, you'll make up for it. That's for sure. There's a lot going on. So with DeFi in general, there's a lot of like emergent trends, I'd say like recently or going forward. Where do you kind of see the overall DeFi space going? What kind of is most interesting to you within the DeFi world overall right now?
So a few of the things that are really interesting to me that I'm kind of excited about is I am really excited, honestly, about a lot of real world assets coming on chain, and the denotion of those real world assets on chain. So we've seen some announcements and some things from like Centrifuge, bringing some real world assets on chain with Maker and Aave, which is really exciting because now you're going, all right, we're going to use real estate and other assets like that as collateral to borrow on chain, and that is really exciting. There was a bank, SocGen, in Société Générale, as I'm told it's pronounced, in France, that tokenized $40 million worth of mortgages and then used that to borrow 20 million DAI through Maker. I mean, those are big deals because now that's what we've been looking for, is utilizing this blockchain technology to denote ownership, which is essentially what an NFT is, right? A security token, anything like that. It's denoting ownership. And then saying, okay, once we've done that, now we can utilize the technology, we can utilize smart contracts and go borrow money, do what the economy is supposed to do, which is move money to where it's most efficient. And we can do that using wallets and using Web3 and DeFi. So real world assets coming on chain in a way that they're part of DeFi, not just in a way where you have a security token instead of LLC interest or something. It's more of banks and companies like that using, taking real world assets on chain to, be collateral in Aave or Maker, or, borrow DAI against it or something like that's really exciting, because now you have an asset that you're going to have a really tough time liquidating that asset, right? It's not like real estate goes to zero, right? Real estate doesn't go to zero. It's always worth something. So we don't have that issue of all of a sudden this protocol could be, hacked and all the collateral you have using that protocol's token goes to zero. You don't have that anymore. If you have a building is a building, right? Like a building doesn't go to zero. There's no protocol that does that. So that to me is, maybe the most exciting aspect. And couple that with something like Maple Finance, that is basically bringing, taking DeFi money and lending it out in somewhat of a traditional finance way. That's saying we're still going to go through somewhat of an underwriting process, but where we get the pool of money is going to be decentralized finance money. And we're going to create a protocol that allows someone to go lend that out, to essentially be an underwriter and go lend that money out. That's pretty exciting as well. So to me, those are really exciting. And of course, I'm biased, but having more and more in the traditional financial industry, understanding, wanting to learn, and wanting to help clients, whether they're accountants wanting to help clients, or financial advisors, or lawyers, or bankers. That is really exciting to me as well. So it's a lot of it is bringing traditional finance and real world assets into the crypto space, because then we go beyond this idea of fake internet money that people say doesn't have a value because we created it out of nothing, to, okay, no, this token that I have actually represents that building over there. Therefore, now it's not fake anymore. Now I'm just collateralizing this, and we're denoting it with money, and the money came from somebody else, and you're opening up more participation and more opportunities and more yield and all those things. Like that to me is what's really exciting this year.
Yeah, it reminds me of the Packy McCormick article recently. I forget what it was called, but I'll link it in the show notes somewhere. But the whole premise was like, it's just practice. So like Constitution DAO raising $40 million to buy a physical copy of the Constitution in 3 days. Is that changing the world for the better? No, but like, does it show that an internet mob can raise a substantial amount of money over the course of a few days, centered around some specific goal, like buying the Constitution? Yes. So with all of these, I mean, you think Maker, yeah, I take my ETH and I put it in a vault and I take out a loan on it. Like, is this the killer app, the final form? No, but that mechanism of collateralizing, putting something into a smart like vault and then pulling a loan based on that, that's going to be used with real assets. And then these permissionless borrowing and lending, like, is that the final form? No, but is it this crucial building block as we go forward, where real underwriters have to actually use this and there's some sort of permissioned final form? Who knows? But this is the joy of innovation and having a bunch of really smart people kind of picking up these little practice things and run with them. That's for sure.
Oh yeah, that's all exciting, and you're right. It's practice, right? We're running through it with internet money, so that when the real money comes in, we're ready to go. We've plugged up all the holes, and we've made it. We've made it safer. We've figured out what the selling points are. We figured out who's going to use it, how to make it easier to use. I mean, you and I both know it's not. Once you get in, it's still not easy. Like bridging assets to L2, not that easy. Figuring out which L2 you're going to use, not very easy. So it's still not easy to use, which of course is one of the objections. But you're right. It's just, and I guess Packy's right. It's just practice right now, trying to build out what will be the real financial system on top of the technology that, again, just makes it more efficient.
Yeah, and to be clear, both of us, I believe that this is real money. This crypto thing that we spend all of our time in has real value. That's hopefully that should be abundantly clear with what both of us are doing. That's for sure. But
Yeah.
also commenting on the difficulty, I think this is part of the appeal at this time. I mean, I just bridged over to Phantom, which is like an alt L1. So this DeFi flourishing of activity is now bleeding over to these other alternate layer ones, like a competitor to Ethereum, or like a layer two on top of Ethereum. And I mean, there's like 45% yields on stable coins on some of these things. And it's not easy for most beginners to get there, but if you get there, there's some pretty good arbitrage or pretty good opportunities, in these kind of more inefficient markets. So definitely the difficulty is a bit of a feature at this point, I think.
Right. It's definitely a feature. It's definitely part of it, that if you can get your money over there, then there's some great yields to be had. But to be honest, Ben, like looking at it from either a traditional finance perspective or just a person who doesn't get it perspective, you go, okay, seriously, how can I make 45% on my dollars on right. Something that's essentially dollars? Something's got to be fake. There's got to be a rug pull somewhere. Even if I didn't know the rug pull nomenclature, I'd call it a rug pull, right? Someone's going to take my money somewhere. And what we really have to be careful with, what really worries me is we all, talking DeFi stuff, look over at traditional finance and we talk about how there's this huge moat that's been built because the people with money get to make more money, right? Like it's so easy in this country and in most developed countries. If you have money, it is so much easier to make more money. You have so many more opportunities. You don't need liquidity as much. You're an accredited investor, like all those things. You have more opportunities. And the initial ethos, the initial beauty of DeFi was you didn't need that. You didn't need to be one of the ones with money. The worry is now the moat is different. The moat is you have to be one of the early adopters. You have to be technologically savvy now to be one of the ones that earns all the money. And of course, once you do that, you've earned it. And now you don't care that the fees, the gas fees on ETH are so high. You're totally willing to spend $300 to make 300,000. So we have to worry about not building the same moats, right? About not having that and still maintaining that ability for more participation and more inclusion. So it worries me sometimes that there's such a technological moat, and that if you get into a lot of the discords, we mentioned get in the discords, learn about this. If you want to, really learn and really get involved and figure out where your career is going. But you and I both know it's also hard sometimes in those discords. I mean, it is some intense talk about crypto economics and token economics and what to do with the treasury and stuff. It gets hard sometimes. And if you're not
very
savvy
hard.
It's
I
very
have a
hard. Yeah.
CFA and I don't understand half of these things. Sometimes the
Yeah.
like financial, well, this is the thing about crypto, right? It's not just like understanding finance, economics, game theory, like all of these aspects roll into a tokenized community, which is what makes it so interesting. And to add to that, Discord is a disaster. Like there's so much noise, and you'd be plugged in 24/7 and still miss a lot of things. That's for sure.
Oh, yeah.
Um, all right. So I'd be remiss if we didn't talk a bit about regulation. We're talking about earning double-digit returns on stable coins, which is pegged to the US dollar in this alternative ecosystem that doesn't have KYC, that doesn't have AML. Um, Walk me through current state of regulation, where it is, what has happened significantly, whatever you feel would be helpful here.
I think the state of regulation in the US can be summed up with this. Bitcoin is not a security. Everything else is open. Right? That's kind of the current state of regulation in the US. Bitcoin is not a security. Everything else is kind of up for grabs. We used to say Bitcoin and ETH, but it seems like Gary Gensler recently has said, well, maybe ETH is a security too. So it would be really helpful if there was some regulatory guidance. We keep using those two words together, regulatory guidance. It would be really helpful if the regulators could say, here's what we're going from here on out. Here's what we're going to consider securities. Here's what we're not. The problem, so many of the problems come from the fact that as much as either regulators or some attorneys or whomever wants to say, well, this fits into this bucket of regulation that we've had for 80 years. It doesn't. It absolutely does not. Bitcoin, crypto, anything DeFi for the most part does not fit in any buckets we've had in the past. And part of the reason is because not only can I put my money in some of these cryptocurrencies and some of these digital assets, DeFi assets, but I can also send them to you. Right? I can hold on to them custody wise, and then I can send them to you as payment. You can say, look, Adam, you owe me $1,000. You can give me 1,000 USDC, $1,000 worth of ETH, $1,000 worth of Bitcoin, whatever it is. Well, how do you regulate that? Is it regulated as currency like a bank would be? Is it regulated as a security? So that falls under the guise of the SEC. Is it regulated as a commodity, which a CFTC wants to do? So since we're not sure what it is, all the regulatory bodies all want to regulate it, but they can't all regulate it. We can't have it be subject to all these different regulations because it'll never move. So we have those issues going on with everyone trying to figure out who regulates it. Of course, there's, the US government wants to get in on it because of tax purposes. They want to tax it. But they don't even know what to tax. We have issues already that say that where if I bought Bitcoin for $1,000 and I paid you $2,000 worth of Bitcoin, well, that's a capital gain too. So I paid you for something. You gave me the $2,000 worth of value, and yet I still have a capital gain on it, right? That gets to be a problem from an investment standpoint, from a financial service perspective. Who's going to be the custodian? But custody is so different. So I'm talking very roundabout way, but the honest answer is, as I've said, Bitcoin is not a security. Everything else is up for grabs from a regulatory standpoint because it doesn't fit neatly into any boxes that we currently have. And so there's going to have to be thoughtful regulation and this is for the most part coming from Congress. They're the ones who make the rules. Everyone else just enforces them. So, not to bang on them, but when was the last time some thoughtful regulation came out of Congress? Right. And those are not exactly the people that, for the most part, they're not exactly the people that get crypto, that get DeFi. And they tend to be very protectionist. They're very protective of the US and the power of the US and the value of the US. And that a lot of that power and value is in the dollar. So how do we protect the value of the dollar? You mentioned stable coins. Well, they've intimated stable coins should be regulated like banks. Okay, well, again, doesn't fit neatly into a box because how do you regulate a decentralized protocol? Like how do you regulate Maker, which creates DAI, right? There's no company you can go regulate. So how do you do that other than to say no one's allowed to use it? But then, okay, I have a DeFi wallet. How do you regulate that? So I think part of the problem is who has purview over it? What is it? Whatever we're going to call it. And then, as we've said, some of it goes above and beyond the tokens you invest in. It's the system, it's the protocols, it's the economic structures that are being built. How do you regulate those? So regulatory guidance would be helpful, at least in terms of tokens and what's a security and what's not. Hester Pierce has said it would be great if we had some sort of sandbox and give protocols a 3-year time period to get to some sufficient level of decentralization before we call them a security. That would be really helpful. But look, on the other side, in the absence of regulation, while the government kind of hems and haws and goes back and forth, everyone in DeFi just keeps building, right? It just keeps getting bigger and bigger, and more money comes in, and more protocols, and all that, and maybe it gets to the point where it gets so big that they can't over-regulate it. So they just go, all right, we're going to create a whole new body to, quote, regulate it, but it's going to be regulated on its own terms. It's going to be regulated for what it is, which is this decentralized economic structure, not fitting in any boxes we already have because it's already gotten too big.
Oh, and the boxes that were created in the 30s and 40s, or pre-1950, for sure, to use for this.
Right.
I mean, you mentioned some potential clarity that might be helped, but like if you could wave a magic wand and change something within this DeFi space that would help accelerate kind of the clarity on this, what would that look like?
I think that if I could ask regulators to do something that would give us some clarity, it would be clarity on what constitutes in the crypto or in the DeFi world, what is going to constitute a security. Okay, what is there can you give us guidance, even if it's different from what we've had in the past, that says a protocol can launch a token, it is not a security for the first couple of years, and you have X amount of time to become sufficiently decentralized and define what that means. And then if you have not, it's a security and we have to make some retroactive penalties, or you are then, a sufficiently decentralized token, you can go on trading and everything else you do. That would be incredibly helpful because there are so many people, we work with financial advisors all the time. And the worry with financial advisors is, what if I get my clients into some token and all of a sudden the SEC decides it's a security and has to be delisted from Coinbase or wherever, and they get sued, and all of a sudden my client's investment goes to zero because the SEC said they're a security and sued them. Like that's not fair. Therefore, I'm not going to put my client in them. Right? That would be one of the most helpful that I see. That could be a quicker hit. Right. The rest of it, stable coins are a big one too, man. If they could just let stable coins go and give some guidance as to what we can utilize as a stable coin and actually transact with it, actually, have stores accept, retail stores accept stable coins and such, that would be incredibly helpful. Because then all of a sudden the USDC or the DAI I have in my wallet, I could use that to pay for my coffee.
100%. No, I think that's good stuff. Well, I think this is a good transition into what you're doing with PlannerDAO. I mean, there's a lot of hurdles involved with getting people over the line with what DeFi is and why it's important, but then even more so talking about regulations for sure, but with financial advisors to get them comfortable enough to say to their clients, yeah, this is something that I think deserves like a second look. But I just want to read like your tagline on PlannerDAO because I think it's quite powerful. But empowering financial professionals to make digital assets and decentralized finance, DeFi, accessible to all investors, which is super, super powerful. So walk us through PlannerDAO, where you guys are, and kind of your near-term roadmap, I guess.
Yeah, thanks for giving me the soapbox to talk about it. We started PlannerDAO in May of last year. Steve Larson had the idea for it, and my words to him were, "That's such a good idea. I'm jealous that it wasn't my idea." But the idea was we just need this is when DAOs, were just getting really hot. We said we need a DAO for financial advisors, and we didn't even know what that meant. We just, I mean, we knew what a DAO was. We didn't know what we were going to do with it, but we said we might as well start it kind of before someone else does. We didn't know where it was going to go. We just knew we were open enough to be organic about it and say, let's figure this out. We ended up giving the certification, so certified digital asset advisor, the designation over to the DAO. And that was kind of the first thing that the DAO had, right? It was like 15 of us, plus we had the CDAA in there. And we said, we're going to manage the CDAA, the certified digital asset advisor designation, much like the CFP board manages the CFP or one of those. We're going to do that. We're going to find other education partners, that kind of thing. We said, okay, that has some value. We're going to figure out how to use that to get money into the DAO. And the way we do that is people have to take the exam from the PlannerDAO to be a certified digital asset advisor. They have to pay to take the exam. And by the way, they pay in cryptocurrency. They pay in USDC or DAI to take that. So it goes directly into our wallet. Well, what we found, one, we just hit over 700 members in the DAO that we started in May. It's a DAO of essentially financial advisors. So the tough part is it's a bunch of people who are not crypto native. So when you jump into any Discord of any other DAO out there, it's a whole bunch of crypto native people that totally understand getting paid in tokens and stuff. These are people who in ours that are not necessarily crypto native that we're having to build this. But I think it's better for us because this is what more DAOs are going to be like. More DAOs are going to be people that are not crypto native than are, right? If that's a structure that continues forward, if it's a governance or it's a corporate structure that continues forward, more likely than not, the people that come in there are not going to be very native in crypto and DeFi for the time being. So we're kind of, I don't know, blazing that trail, I guess. And it's really not very easy, but it's also nice because we don't have anyone sitting there in the DAO, in the chat we have going, when token or when moon, or like, they don't care about that. They just go, okay, let's just go build some cool stuff. What are we going to build? Well, we have the education piece. What else can we do with all these people, all these financial advisors joined together in a room around, centered around a treasury and a token, right? Aligning incentives. What can we do? Well, now there are so many other tools. There are so many other services, products that we can think about offering because we as a DAO don't have to worry about revenue minus expenses equals profit, right? We're a nonprofit. All we're worried, the main worry is, can we create something that's going to add value to our treasury, right? It's going to add crypto wealth, whatever it is, to our treasury, and then can we grow it? Can we develop some sort of insurance program, DeFi insurance program for the people, for the advisors in our group that are offering crypto as part of their practice? We can probably figure out how to do that and have the money go to our wallet. Can we manage a capital pool in there? Yeah, we could probably manage a capital pool to provide the, to back the insurance. Can we help create a tool that they can get their clients directly into DeFi wallets? Yeah, we can probably do that. And by the way, we can probably earn money, using Paraswap or CalSwap or something. There are ways that the treasury can be earning where it's not, hey, you, the advisor, you have to pay us $50 a month to use our service. Okay, so that's some of the beauty of it is we can be a little bit more creative. So whereas in the financial services world, you have Financial Planning Association or the CFP board or NAPFA or NAFA or any one of these other organizations, the members of those organizations don't get to participate in the growth and the value of the organization, right? Our members get to participate in them. They join working groups, they help us grow, they help be creative. Of course, it's not lucrative for anyone right now. No one makes money at it, but we pay in plan tokens that admittedly have no value right now. But maybe they will eventually, hopefully they will. But the nice thing is we don't have to answer to any investors. We can do kind of whatever we want, obviously within the realms of compliance and regulation and legalities. We're doing things like we're going to have a conference in April. And what we said is, look, we don't want the typical conference. We want it to be workshops. It's nothing but workshops. You come there, if you're an advisor, you come there, and by the time you leave, you'll learn, you can basically set up your entire practice to advise on crypto by the time you leave. That's the goal. How do we do that? We get sponsors to buy our plan tokens. And that gives them the ability to come talk to a bunch of advisors, right? We can do stuff like that, again, because we're centered around a treasury and a token, because the value of the treasury will maybe eventually get reflected in the value of the token. We don't have to worry about paying a lot of costs and therefore distributing profits to any investors. And that's tremendously powerful, as opposed to either a full-on organization like Financial Planning Association, or a for-profit entity like a company that gets created to sell a product on a monthly subscription service, right? We see that we can be a lot more creative and have a lot more value. We just have to stick to the ethos of crypto and DeFi, right? Which is things like, we're not taking investors, we're not taking sponsors. We don't want to be beholden to anyone except the DAO members. That's who we are beholden to. And because of that, we can be international. We can include lawyers and accountants in addition to financial advisors. So, man, it's just been a lot of fun. It's been like 8 or 9 months we've been doing it. And every day, it seems like every week we think of something cool and new. We launched an index token just because we could, right? Because why not? Why not launch the PDAO index token? And we're not charging anything for it. It's free, but we wanted to see how to do it. And so now within our compliance working group, we have a framework, and anybody can come in as a member and start going, you know what? I don't like that framework. I'm going to make a proposal as to why we should change it. Okay. You can't do that in any other organizations, right? In no other organization do you take a course, take an exam, and then immediately get to participate in the governance of the designation you just got. And we give that opportunity.
Wouldn't that be nice with a lot of these professional designations, right? To have that ability. That's for sure.
Yeah, you mentioned you're a CFA. Imagine if, like, right after you got it, you got to go be a part of directing the future of the CFA.
Oh yeah.
You don't have that opportunity.
No, I just pay a little bit every year to put 3 letters after my name. But in their defense, I certainly don't take advantage of all the things I should be doing. That's for sure.
Right.
For the financial advisors out there, or like, what does your target customer look like for PlannerDAO? What are they interested in? How can they find out more? Talk a little bit about that.
So for PlannerDAO, it's really any financial advisor, lawyer. What we say is anyone who is a fiduciary, and we don't use a fiduciary in the legal sense of the word fiduciary. We use it as someone who is at some point helping someone else with their money. Your job is to help someone else with their money or their financial life. And so that encompasses financial advisors, lawyers, accountants, bankers, anyone like that. You just go to PlannerDAO.com and hit join, and you can come hang out in the lobby. You get to be a full-fledged member and be part of a working group by being a certified digital asset advisor, which means you take the course from an approved education partner. And then once you take the course, you take the exam, and you get to come in and help us work, help us grow what the DAO is. Now, my company, Interaxis, is one of the education partners. So we teach a course. So we charge to come take our course, to be a financial advisor, banker, CPA, whatever, to learn about cryptocurrency and DeFi from the very beginnings of Bitcoin all the way through DeFi, DAOs, NFTs, wallets, all of that. We teach that course. And when you're done, you get to go take the exam if you want to, and be a certified digital asset advisor. So those are the 2 hats that I wear, right? I have a company that teaches the exam, that teaches the course, which I still charge dollars for, all those things about Web2. And then I have I'm managing the education. Ron and I manage the education working group within the DAO, where we try to push the direction of certified digital asset advisor, right? And we have other working groups. We have a compliance working group that's looking at SMA managers, that manages the index token. We have an operations working group that manages the inner workings of the DAO. So we have groups in there to work on. And so if you want to be a part of this organization and help it grow and possibly get some tokens as part of your work, then you come join and see what it's like. Just like we said early on, if you want to see what's happening in the DeFi or crypto industry, go join a group and start working and see what's happening.
Definitely. Well, Adam, I think this has been very, very helpful. We've gone over a lot. One thing that we talked about a lot is, DeFi. There's so much happening. Where do you point like obviously with financial advisors going through PlannerDAO, but for the average user who's interested in learning a little bit more about DeFi, doesn't know where to start, where do you point them?
One is I tell people, your friend and mine, DeFi Dad, is a really good one to go follow on Twitter and especially YouTube, and go watch what he's doing, because I think he's going through a lot of the heavy lifting of here's how I use a wallet, here's how I actually get connected. I think that's a really good resource. And then other than that, I would tell people just go try it out a little bit. Like learn a little bit and then try a little bit, and then learn a little bit and try a little bit, and just keep doing that, and doing it with some money that you're okay losing, because you very well might. Your gas fees at the beginning are going to eat you up. Just if you really want to learn it, you got to jump in and do it. You got to figure out what it looks like to move your money, to move your ETH from Coinbase to a MetaMask wallet. And then what happens when you connect MetaMasks to some other to some protocol and move your money there? What does it look like when you have an LP token sitting in your wallet? Those are the things that you have to just try out to understand what it is. You have to try, you have to buy an NFT to get what it's like to connect a wallet to OpenSea and see your NFT, right? Otherwise, it doesn't make sense. But when you see it and you go, oh, I'm the only one who owns that, that's pretty cool. Like that starts down the road of, okay, what else is there? What else can I do? And this is something that to learn it, you really have to do it. Otherwise, it just doesn't make nearly as much sense. I could explain on my whiteboard all day long, but until you actually try to do it, then you're just not going to be able to. And you can go look at our YouTube channel too, Interaxis on YouTube. Cool. I probably should have mentioned that.
I'll link that one as well. And DeFi Dad, good beginner tutorials. Definitely highly recommend him as well. I'd also be curious. So after spending so much time in DeFi and with people going along their learning process, and obviously being an educator yourself, what common narrative do you hear that you disagree with?
There's the common narrative of it's not backed by anything and it could all go to zero. And we hear a lot of why are there so many cryptocurrencies? Which one is going to be the winner, as if there has to be the winner. There's a lot of, and I'm giving you a lot of most common things I hear, because I obviously hear a lot. I talk to a lot of financial advisors and a lot of people in the traditional finance system. And I've really made myself a rule where I'm not arguing anymore. I'm not, if people are just vehemently against it, I just say, okay, that's okay. I don't need to convince everybody. It's not my job. It's incredibly exhausting, and it's not worth my time. So some of there's a lot of it doesn't have any intrinsic value. And a lot of people say that about everything overall. And what they really mean is Bitcoin, but they don't understand that all these other cryptocurrencies do have different value. They're representing a protocol that earns money, that makes money, right? Or a protocol that people are using has billions of dollars locked in it. That's really important. If you own stock in a bank that had billions of dollars locked in it, that's worth something to you. The other thing that kind of frustrates me is this idea that it's all based on code, or it's a fad. We hear that it's a fad. It's going to go away. It doesn't make sense. And my frustration there is, look, the irony of using something like Twitter or LinkedIn, which is on the internet, to complain that the next evolution of the internet is not going to make it should not be lost on anybody. That there was a point where there were plenty of people that said the internet wasn't going to make it. It doesn't make sense. Why do we need this? I can call people on the phone. I don't need to send them a chat or an email all the time. There was plenty of that going on in the late 90s. I remember I was just getting out of college, and that was the beginning of Amazon. And anyone watching this has probably heard me say this 1,000 times, but it was like 1996 when some dude in Seattle decided he wanted to sell books. And it was absolutely crazy to think that I was going to put in my credit card number to this thing, and I was going to get a book in like a week and a half, and pretty much any book I wanted in a week and a half. That was crazy talk. And obviously it was going to get hacked. Obviously someone was going to go use my credit card to do something else. And this wasn't at a time when you had a cell phone that someone could text you and say, someone's using your credit card illegally. It just got used, and all of a sudden it was like $5,000 was spent for somebody to buy a plane ticket. So it's frustrating that we've come to this point in the internet, and people seem to forget that there's some natural evolution that potentially goes on here, and we need to think about that and realize that technology, the economy, everything evolves naturally, and this is just happening. It's just part of evolution, and the internet happened like that. And if you don't remember, then go back and really think about where you were, if you're old enough, in like 99 and 2000 and 2001. And remember what happened when the .com crash hit. The Amazon went from like $100 to $1 Amazon stock. Everyone thought it was dead. This is crazy, this Amazon thing. By the way, it makes no profit. And all they're judging people is based on eyeballs, how many eyeballs view the website or new web visitors. And the same stock market people were saying it's all crap and it's all going to crash and it's not worth anything. And we need to actually sell products for a profit all the time. And lo and behold, Amazon has done pretty well, right? And Google's done pretty well doing nothing but attracting eyeballs. That's their only job, is get more eyeballs, right? They've done okay. Apple gave us a smartphone after a while, and iTunes and all that was crazy at the time. And it seems to have made it, and we can't live without our smartphones, and we can't live without buying, we can't live without streaming music anymore, which was crazy at one point. So just for some people, the lack of open-mindedness to say, we don't need that, things work just fine. It doesn't make sense, because we're naturally going to evolve to something that is a more open and better system. Yeah. We just are, because we're people, and that's what we do. That's what we do. And I know it's going to happen because that's what we've always done. We've never stopped evolving. And I know that because I'm here talking to you on a video phone, right? Which again, in 99 was crazy talk in 1999. But here we are, we've been doing it for 2 years straight. Nothing but this, right? Except for when you're sitting 3 seats down from me.
It's true. I mean, I think of the Chris Dixon quote that like the next big thing probably starts off looking silly or like a toy. And the iPhone was pretty silly when it first came out. It didn't work. The app it was very disconnected, and now it's very much not silly. And
really smart people are going to figure out how to make it work, right? They're going to figure out how to build cool stuff, and the rest of us are going to start using it. And then it's going to be to the point where we can't imagine that we ever didn't use that. I can't imagine now calling and waiting for a cab, right? Having someone call me a cab. No, I just use Uber. I go to wherever I'm going and I hit Uber, and a car picks me up in like 3 seconds. And I pay for the Uber without taking money out of my wallet, right? With a tip.
Oh yeah.
And I get rated for whether or not I did that. The driver's going to rate me. That's nuts. But it's so obvious and ubiquitous now that DeFi is going to be the same way. And if you don't think it's going to be the same way, then, enjoy getting run over by it, because you don't really have a choice anymore. It's just natural evolution. And I have no other way to say it other than we naturally evolve this way. And I know it's going to go that way because it always has. It literally always has. We have never stopped. We've never hit the pinnacle of technological and financial evolution because we haven't ever done it yet. So why would we stop now?
Yep, completely agree. Well, Adam, this thing has been packed full of goodies. I'll be sure and load up the show notes with a lot of the links we talked about. But where can my listeners find out about you or PlannerDAO? Where would you like to see them? Send them.
Oh, okay. So PlannerDAO is PlannerDAO.com. So if you're a financial advisor, lawyer, accountant, banker, whatever, come join us there. My company, Interaxis, we teach the course, the Certified Digital Asset Advisor course. So if you want to learn more about the designation, it's at certifieddigital.org. My website is interaxis.io. I'm on Twitter at Interaxis8, which is where I do most of my chatting around for whatever random thoughts pop in my head, and sometimes some interesting things about DeFi.
Cool. And I'll link those. Great to see you, Adam. Thanks for coming on today.
Great to see you, Ben. Thanks so much. Hope to see you in real life very soon. And of course, congrats with everything on charge particles. Love that. And we're hopefully PlannerDAO is going to build some stuff on top of that as well.
Looking forward to it. Thanks, brother.
Thanks, Ben.
There you have it. Thank you for listening. I really appreciate your support. Show notes, transcript, links, and more can be found on our website at altassetallocation.com. If you'd be so kind, please share this with anyone you think might be interested or get some value from this conversation. If you have any questions or comments, please reach out. I'm always happy to hear them. Lastly, if you're on YouTube, please like the video or subscribe to the channel. If you're listening to the audio version of this, please subscribe to the podcast and or leave a review. This really helps more people find the podcast, and I really appreciate it. Thanks again, and hope you have a fantastic day. Happy investing.